Hi, this is Jim Welsh from macrotides.com. Thanks for tuning in. Over the last week, the price of gold has surged, and with that breakout above 1400 has generated an awful lot of discussion and media attention. So I want to take a look at why so many people are now focused at gold, and more importantly, whether or not this is a good time to be a buyer. If we look at the long-term chart of gold, and in this case I'm looking at the gold ETF GLD, since it tracks gold pretty closely, we can see that going back to the summer of 2016, gold peaked at about $13.75 in terms of gold. On the chart that you're looking at, it is the capital letter A in brackets. From that point in time in July of 2016, gold proceeded to chop sideways for almost 3 full years, making a low in December of 2016 at about 1122 to be exact, rallying up to January of 2018. Gold peaked about 1365. Last fall, it dropped to 1160. And then it subsequently rebounded up to 1347, and then finally pulled back over the last couple months into May with a low about 1266. You can see the trend line connecting the highs from July of 2016 and January of 2018, and gold is clearly broken to the upside. So long term, this is a very constructive and positive look at gold, and it suggests that gold does indeed have more upside. However, as you will also note, at each of the various peaks over the last 3 years, there have been more than 90% bulls at each of the tops that took place in July of 2016, January of 2018, and even the short-term peak in February of 2019. Bulls are now again over 90%. So that suggests that near-term, gold may not have an awful lot of upside. In addition, gold's RSI is really overbought. On June 25th, it reached 82.2, so that is a very, very high number. It's positive in the sense that it was able to be so strong as to generate that kind of upside momentum, but again, it cautions that there could be some near-term choppiness. Positioning in the futures account market also suggests near-term caution. Managed money has typically followed the moves up and down in gold, and as you can see, as of June 18th, managed money had the largest long position in gold in at least 3 years, 3.5 years. What this suggests is that gold is likely to pull back to, I think, $1,400 or a little bit less over the next 3 to 6 weeks, and provide, I think, a better entry point than buying gold at $1,430 or higher. In the weekly technical review published on June 24th, I suggested that it would be wise to sell 1/3 of the position in gold if GLD and IAU traded above 135.25 and 1372, and to sell 100% of the gold stock ETF GDX if it was trading above $26. Gold stocks are very volatile, and they've had a terrific move. I basically went long at 2052 on GDX. This morning on June 25th, gold GLD did trade up to 135.25, as did IAU, so all the price levels were in fact triggered. In the near term, again, I think gold is likely, and the gold stocks have the potential to pull back modestly, but the gold stocks may be pulling back 8 to 10%. Longer term, the picture is positive. In the meantime, sit back and we'll take a look. Thanks for tuning in, and hopefully something good will happen to you today.